from the past few weeks, the economic activity seemed to have restarted in India. This, of course, is in conjugation with the moderation of coronavirus pandemic in India. The daily number of coronavirus cases have been less than 20,000 cases per day for over 2 weeks now. Previously, during the quarter 1 of financial year 2022, the Indian economy had registered a growth of over 20.1%. This was despite the fact that the most of the country was under the strict lockdown as the country was battling the second wave of coronavirus pandemic then. This rise in the GDP despite the second wave of the coronavirus pandemic was primarily because of the low base effect in which the economy rebounded after it was set to very low levels during the quarter 1 of financial year 2021 because the coronavirus pandemic's first wave have had hit India back then. In the present situation, however, the economy already seemed to have crossed its financial year 2020 levels, which is the levels it was before the start of the coronavirus pandemic. This is actually what is being suggested by the indicators such as the industrial production, which is already more than what it was during the year 2019, and also indicators such as the diesel consumption, which is close to what it was during the year 2019. Therefore, it is not unreasonable to estimate that the economy might have already crossed the levels it was in the financial year 2020 before the start of the coronavirus pandemic. The near-term projections by the various agencies also seem to be in line with the estimates that the economic recovery in India might have already commenced. The RBI estimates that in financial year 2022, India's GDP is expected to grow by about 9.5%, whereas in 2023, the economy will grow by about 7.8%. Similarly, international agencies such as the World Bank have also forecasted that the economic growth of India in the financial year 2022 will be around 8.3%, whereas in the financial year 2023, they expect that the growth rate of India to moderate to about 7.5%. Furthermore, this optimism about the India's economy is also corroborated by the rallies in the Indian stock market. The stock markets are near their record levels, which obviously indicates the strong confidence amongst the investors that at least in the coming years, the India's economy is expected to perform quite well. It can therefore be inferred from all these factors that the post-coronavirus pandemic recovery might have already commenced in India. But this is of course under the assumption that there will be no new wave of coronavirus pandemic in India. Moreover, with the aim to bolster the economy in the coming years, there are quite a few decisions that have been recently taken by the Indian government which shows its commitment to reform the Indian economy. The government has recently approved the sale of Air India to the Tata Group for rupees 18,000 crores with an aim to revive it and be able to make it withstand the competition again. Similarly, the government has recently converted the Ordnance Factory Board, which was a department under the Ministry of Defense, into 7 fully functional government-owned defense companies. With this decision, the government expects that there will be efficiency improvement in the manufacturing of ordnance in the country. The government has also told that these 7 companies have already been given orders in tune of 65,000 crores. Furthermore, the government has also launched a new scheme to set up 7 mega textile parks in India with an aim to make Indian textile industry globally competitive and eventually boost up the Indian textile exports. These textile parks are also expected to generate a lot of employment as after agriculture, the textile sector employs the second most number of people in India. Such steps provide attestation to the Indian government's commitment to reform the economy and remove its inefficiencies, and also to bring synergies across different sectors in order to take the Indian economy to the next level. Along with these one-time decisions, the government has already been implementing long-term strategies to modernize the Indian economy and make a push towards the advanced technology in order to sustain secular growth in the Indian economy for the coming 5 to 7 years. For this, the government has already implemented long-term plans such as the National Infrastructure Pipeline with a capital outlay of $1.5 trillion and a duration of 5 years, and with an aim to create world-class infrastructure in India. The projects in the NIP primarily belong to energy, road, railways, and urban project sector. Similarly, the government has also launched the PLI or Production Linked Incentive Scheme in India with an aim to augment the manufacturing sector of the country. The PLI will provide incentives for setting up the production facilities in India, and it has a capital outlay of close to Indian rupees 2 lakh crores or $26 billion, and it spans across 13 sectors such as pharmaceuticals, electronics manufacturing, textile, auto, and solar PV cells manufacturing, etc. Moreover, the government also has an ambitious plan for India to have a digital economy of $1 trillion in the next 5 years from the current level of $250 billion. A Bahrain-based investment major, InvestCorp, in their assessment, have also provided reaffirmation to this and said that the Indian digital economy valuations are likely to reach capitalization of $1 trillion by 2025. They also said that this will be affected with the increasing use of technology in sectors such as the digital payment, e-commerce, healthcare, and education, etc. In order to capitalize on these trends, we are already seeing a bunch of startups up across the India. Around 30 startups have hit a valuation of $1 billion this year, and currently in total there are over 60 startups in India that have reached a unicorn status. Experts suggest that this number can reach to around 150 unicorn startups over the next 5 years. With initiatives such as these, the government of India is hoping to achieve its aim of taking the Indian GDP to $5 trillion in capitalization by providing impetus to its economic growth and also simultaneously the economy. I had mentioned in one of my previous videos that the pandemic are usually followed by the post-pandemic economic boom, and this current swelling up in the startup ecosystem and growth and reforms that we are witnessing in other sectors might just be the indicators that the economy might just recover to a level more than what is currently being expected. So, in conclusion, it can be said that with all things being considered, it will not be unreasonable for anyone to remain about the prospects of Indian economy in the future.